I'm super excited to have this conversation because your thing is crypto fitness, and I'm more from the strength and conditioning and kind of fitness background. I've been working with personal trainers and gyms for the last number of years. But once I started getting into crypto, I'm like, man, I got to talk about this. Like, this is important for people to know. I need to know more about this. The only way I'm going to know more about this is if I start talking to other people about it, answering questions. So you've been on this journey for longer than me, and you've had more success. Am I correct in saying you're full time in crypto? Like that's you. You can support yourself through your success in crypto.
Yeah. Yep.
That's the dream, man. How many people want to live that life?
Everybody, man. This is the it's that's where it's at. I mean, it's taking personal responsibility for, everything in your life and just trying to get the government and everybody else out of your pocket. So,
But how do you do it?
yeah, that's the question. Research, you gotta have a fill your knowledge gap. It's just like training. It's just like going to the gym. It's like when you first go to the gym, like you suck. Like you don't know how to lift anything if you haven't had any prior experience. And so just like going to the gym, the more you do it, the more consistent you get with it, the more things you learn. And then obviously if you can learn from somebody who's in the space or is successful already is another way to do it. Like mentors and just like reading and learning is really like the best strategy. That's how I got in it, to just watching lots of YouTube videos, watching, just consuming content on it. And eventually the more content you consume, you eventually just start doing it. And then once you start doing it, you start practicing it, it just becomes second nature.
And when did you start telling other people about it?
Well, I started my YouTube channel last year, in 2021, early 2021. So that's what really, when I took it seriously, like where I really understood things to the point to where I felt like I could help other people come into the space and help them on their journey. So that was like kind of the time. And really, I was in crypto back in 2017. I actually had an opportunity to buy Bitcoin back in 2011, surprisingly enough, but turned it down. I didn't really know anything about it. 2017 rolls around. I came back into the space briefly, made a few trades. I bought like Bitcoin, Ethereum, Bitcoin Cash, Litecoin, just some of the ones that were there at that bull market. And then left the space in 2018 and then just did my own thing. And then came back in 2020 once I really like understood the technology, like what crypto really was and what the value add really is to society. And then from there, it's just been history from there.
Everybody wishes they made that 2011, 12, 14. Whenever they first heard about it, everyone wishes they made that purchase now.
Yeah.
Do those kind of opportunities still exist, do you think? Are people going to be looking exactly the same way at 2022?
Absolutely. Yeah. Crypto is in its infancy still. If you look at like a history chart, if you look at, just for example, like the stock market, if you were to buy like just some random stock in the stock market back when it first started, I don't even know when it started, the 1800s, early 1900s. If you just bought it then and held it till now, you'd be very, very well off. Same thing. The other analogy I like to use is like if you bought a piece of real estate in New York and like Manhattan, if you had just bought a piece of real estate back in the 1800s or 1900s and literally just sat on it, you're literally sitting pretty and you didn't have to do anything. Crypto, it's only been a decade in crypto. That's like, in the grand scheme of things, that's
Brand new.
tiny. Yeah. It's tiny because, and these are assets that can be transported and like literally just like that. And, if you go down the whole rabbit hole of if humans ever become an interplanetary species, cryptocurrency is really the only thing that's been invented to this point that could be a form of currency to transform between Earth and other civilizations at the speed of light.
That's a really interesting concept. That's a mind bender because they definitely wouldn't have any use for the US dollar. It's hard to say whether they would have a use for gold or silver. Maybe they would eat it, or maybe they would, maybe they would use it in their electronics or something. Maybe, who knows? But
Well, the problem,
what use would they have
you
for
could do that,
Bitcoin?
but the problem is that like how, like, let's just play that hypothetical scenario out. Let's just say that gold and fiat currency was still of somewhat of value. How are you going to transport it to the moon? How are you going to transport it to Mars? I mean, what kind of cost is that? So cryptocurrency, it's that same store of value as, like, at least for Bitcoin. Bitcoin's like the same type of store of value as gold, but it can be delivered peer to peer instantaneously. And there's a lot, we don't need to get in the rabbit hole of Bitcoin, because I do think there's much better assets in the crypto space than Bitcoin. But just to kind of play around with anyone who's maybe new to crypto and doesn't quite understand the philosophy behind it and the ethos behind what cryptocurrency represents, that's something to kind of wrap your mind around.
Yeah, I think my mind was starting to go to like aliens and stuff, but you're talking more so about like if humans are on Mars and they want to send some money back to Earth or something, then, but that's it's getting way out there, way out there.
I mean, that's like a long way out down the road, but that just kind of puts it into perspective, like how infant the cryptocurrency really is. I mean, it's only a decade.
Yeah. And so when did you sort of get your first taste of success with this? Did you get a taste of failure first? I think most people come in at the top, right, and then that's their first experience of crypto.
Yeah. So like I said, in 2017, I actually made money in 2017. I didn't hold through the bear market. I got in as things were starting to go up, made some money, and then got out. And then, because I didn't really, it was just like, oh, this speculatory asset's going up, I'll throw some money into it, and made some money, and then got out. And then eventually,
how did you manage to be one of the few that got out?
It was pure luck, just like, oh, look, I'm up this much, I'm just going to pull out, because I didn't really believe in what it represented at the time. It was just like, oh, it's kind of like Dogecoin. Dogecoin's one of those cryptos that there's no use case to it. It's literally just like a meme of a dog. There's no team behind it who's building the protocol or anything like that. It's literally just pure speculation, but people love it. And it was kind of like that. I was like, oh, I'll just throw some money into it, see what happens. And I made some money, and then I was like, all right, taking my gains and I'm leaving. That's pretty much it. I did learn my lesson though, however, in 2020 when I got back in, leverage trading, margin trading. That's like the worst way to do crypto, is like using any sort of leverage, any sort of form of crypto that involves getting liquidated it's just not very good, because the only person who makes money in those situations are like the centralized exchanges. The people who are lending you the money is really the only ones making money there. You get wrecked. There are traders that do it profitably and make a lot of money doing it, but it's more traders lose than win. So that's, if I would make any recommendations to anybody who wants to get into crypto, is stay away from leverage trading. I think your mic is muted. Your mic is still muted.
Can you tell I'm new to this? Apologies. Yeah, I think that's really, so many guys get in and then they think they're going to trade, and I mean, people, and now a lot of computers are working against you if you're trading. And if you're relatively new to this, like if you don't have 5 years of experience, if you don't have people around you who've made many billions or millions at least in trading, then the chances of it going well are pretty slim. And those who have early success in trading, I really feel sorry for. Like, fortunately, most guys get wrecked pretty quick and they lose, a few $1,000s, and then they're like, oh, that's, they touch the stove and they go, well, that's maybe not for me. What's a better strategy then if you kind of see that the odds are stacked against you with trading on the centralized exchanges?
The best strategy is to find projects that, just like getting in the nitty-gritty, doing the research into, just like a stock, right? Like you do the research into the companies. Same thing with crypto. You do the research into the different projects that are out there and what they're trying to solve. You look at what problems they're solving. You look at the team behind the project, if they're doxed or not. Doxed just means they're identifying themselves. And you can follow, like if you go to certain websites like GitHub, for example, you can see the contributions that they're making to the project every single day. So you can
Yep.
see the progress of the project in real time. You look at that. You look at Twitter following. You look at, obviously you want to see if people are following the project and people like the project. And then it's just about trying to identify those gems, the low cap to medium cap gems that have a lot more in the tank than, you know, a 2 or 3x. And then you invest in those early before anybody else. You want to invest in those projects as they're flatlined, like meaning if there was just a big pump, if there was a massive, like, you know, 20, 30x that just happened, that's not when you buy. When everybody's FOMOing in, that's like the worst time to buy, because you're going to get dumped on. So you want to buy when the project is relatively flatlined, and then you wait for Bitcoin to make the first move. Bitcoin is the leading indicator in crypto, so whenever Bitcoin moves, everything else follows it. There's kind of like a cycle within. Okay, so in the crypto space, it's cyclical, meaning there's boom and bust cycles to it. But within those boom and bust cycles, there's also mini cycles. And so the way it works is money flows to Bitcoin first. Then that money takes profits when Bitcoin does, I don't know, anywhere between a 2 to 5x. That money will then leave Bitcoin, go into Ethereum, which is the next largest project, the next blue chip project. And then Ethereum rips, it goes on, it does its thing. And then they take their money out of Ethereum, and then they start, it starts trickling down into the other lower cap markets. So the metaverse is another one that you can make stupid gains in. NFT projects are ones you can make stupid gains in. And so the money will just flow from Bitcoin to Ethereum down to these other, you know, top 100 coins, and then eventually down to the low cap, micro cap coins. So if you're sitting down there invested in these low cap coins before the money gets there, then eventually when the money does get there, those micro cap coins end up mooning, and that's when you take profits.
So people make gains in Bitcoin and then sort of think, well, I can probably make bigger gains in something else. Sometimes can be the psychology, right?
Yep.
But then the challenge of not falling in love with projects and recognizing that there's going to be huge volatility, I think, is something that takes time to sort of accept. Like if you wake up and you look at your phone and, you know, you've lost like 20%, 30%, it's not that unusual, especially for an individual coin, and maybe even for a whole portfolio, depending on the day and the time. How did you go with that initially? Like when you first experienced, I guess your first experience was positive in the 2017, but then
Yeah.
you must have had some rough ones as well.
Yeah. So that's part of like the nature of cryptos, because it's cyclical. You kind of have to get used to big dips. And there's certain coins that you invest in that you believe in long term, that you're like, it's like an Amazon, right? You buy an Amazon even in like the .com bubble. That's just a stock that you just hold on to forever. Google's another one. Those are just stocks you hold on to forever. There's certain cryptocurrencies that have that same philosophy as well, where you just want to hold on to them because they're such great projects. And if you hold on to those coins, like there's days when you see massive losses in your portfolio, because that's just the way crypto is at this point, because again, we are in its infancy stages, and it's just kind of part of the nature of crypto at this point. Until, you know, there's more mass adoption, until the world starts to recognize and it becomes such a behemoth that people can't ignore it, which is actually already starting, I would argue. Until that happens, then there's still going to be, or until it proves otherwise, there's still going to be a cyclical nature to it. So that's just kind of part of the territory of being in crypto. You just got to get used to it. And once you do get used to it, it's like you kind of get numb to it. It's kind of like you get numb to the fact that you see like big 50% corrections, 80% corrections at times. So it's funny though, because once you go back to like traditional legacy markets, it's like, you know, 10% is like everyone's running for the hills, but that's like, you know, you're just so used to it, it's like that's nothing. So it kind of gives you an advantage in the legacy markets if you're trading there. But yeah, it definitely takes a while to get used to in the crypto markets.
It's like a baptism of fire if the first place that you start to invest is crypto, and you're like experiencing these massive highs and then potentially, you know, kind of big lows. No, I've lost everything.
Yeah.
It's I think it's a tough thing, but you learn about your psychology as well. Like I know you're into sort of men's work, and mental health kind of comes into that picture of what things make you actually feel good about yourself. Um, I do
That's why you
worry.
work out.
Yeah, exactly. You got to be training, and I think the crypto stuff is actually really good once you get that feeling for it of like, yeah, whatever happens here, I'm good. Like I'm backing myself, I'm in the game, and I think it for a lot of people encourages them to get to work as well, like to think about income, because if the income is steady and solid, then there's a lot less concern about what's going on with a portfolio. I'm not sure if that's the case for you, but I know you brought an NFT to market. Like that's an enterprising play. How's that been for you?
Yeah, it's been more difficult than I anticipated, but it's one of those things where it's like I believe in the long term aspect of NFTs in general. So, and I believe that there's use cases for NFTs that we haven't even discovered yet. So doing my own NFT product was just kind of a natural part of being in the crypto space. And then it's kind of, very entrepreneurial. It's like you see an opportunity and you just go for it, right? You risk, just like any entrepreneur, you have to take certain risks to reap the reward. And so you got to invest time into it. You got to invest. For me, it was just a lot of sweat equity. I made my own art, right? You got to learn that skill, and that's really what crypto is. It's just leveling up your skills and just learning different skills that will help you in different areas.
We got to have a look at your art. I don't know if we can share screen to see your. Is that
Yeah,
possible or?
yeah. Let me see if I can share screen. Okay, can you see my screen?
There's another window there. Yeah. Should I add it to the stream?
Yeah.
Oh, Beast
Can you
Pro.
see? Yep.
Yeah.
So this is it. This is just like a kind of like not a prototype, but this is like not the completed thing. It's just like it kind of gives an accurate representation. But this is the site that I built, and actually, my NFT project is actually focused on working out. So I have like my story here. There's like the roadmap. Another thing I had to learn was like website development. I built this website myself,
Wow.
and so I just kind of put my story here. This is what I looked like when I was fat. It's like 235 pounds. And then that's me. This is me at like not quite 235. This is like I don't know, 215, 220 probably. And then this is my lowest. This is at 160, 162. And then this was about 3 months ago. So I just kind of explained my story there. And then in NFTs, there's a few different things you can do with them. There's different strategies you can take. A lot of NFT projects will have like a rarity. So like you can mint an NFT, and depending on which one you mint, it random generates an NFT for you, minted on the blockchain. And that NFT will have different attributes. So you can see like a weekend warrior, a swole beast, a ripped beast, a jack beast are the ones that I did for mine. And then there's like a table that tells you like which one's more valuable based off the attributes of the NFT.
Yep.
And then these are just a few examples of some of the NFTs that I did myself. So again, I'm not like a professional artist by any means, but like it was just another skill. It's like, hey, I see an opportunity here. I see the wave coming for NFTs, so might as well get into it.
When
And
did you
then
launch?
they're already launched, yeah. So
Yeah.
anybody can just come here and
When was that?
mint one. I launched when was it? Around Halloween.
Okay. Yeah, that was
Yeah.
pretty good timing. Seems as though it's like become a lot more crowded. It seems over the last few months. Would you say?
Yeah, and like I said, it's like it's one of those things where like going back to the cycles, the mini cycles of crypto, it's like Bitcoin, Ethereum, the top 100 coins, and then it goes into like the mid cap and low cap coins, and then from there after that it goes into like NFTs. So that's kind of the cycle. You'll see the money flow. So you'll see Bitcoin do its thing, Ethereum it'll moon, and then the top 100 coins, and then it goes in the NFTs, and then that's when you see like NFT mania. And then that's when you get a bunch of people like buying and selling. flipping NFTs for stupid money. So it can be pretty exciting.
Have you gone in on any of the sort of more well-known projects in the NFT space?
Yeah, so my NFTs are so the other thing you have to understand about NFTs is there's different NFTs on different blockchains. So the main ones that you hear and know about, such as the Bored Ape Yacht Club, the Crypto Punks, and some of those like bigger mainstream ones, those are on the Ethereum blockchain. But each Ethereum has several competitors to it. So that, for instance, Cardano, Binance, Solana, AVAX, which is Avalanche, Matic. There's lots of different competitors to Ethereum. Phantom is another one. And so each of these blockchains have their own NFT ecosystems. And there's developers on those ecosystems that are developing their own NFT projects. And mine specifically is on the Cardano blockchain. So there's good and bad about that. The good is that the Cardano blockchain is faster. It's got lower gas fees, which means it doesn't cost as much to mint the NFT. Whereas if you go on Ethereum right now, gas fees are like you got to pay between $30 and $150 just to mint like an NFT, for example. So it can get kind of out of control. And then Cardano, it's the downside to that is that it's not as popular, right? It's not as popular as the Ethereum NFTs. So there's trade-off there. But as far as the NFTs on Cardano, yeah, I do have a few blue chips on there as far as NFTs go.
Yeah, that's cool. Yeah, I was a little bit late to look at it. I kind of heard people talking about it, and I was like, oh, I don't know, I'm not really interested in learning about that. And then started to learn about it. Probably got really interested in them in about November, maybe. And yeah, I can see a huge use case for it in terms of business and like community rewards and all sorts of plays there. But I think the regulatory clarity about how it's going to work is huge. Like if people can pay royalties to NFT holders, then I think that's going to blow things up where previously everyone invests in Apple and Google and Facebook because they're big brands and you know them and people are always going to invest in them. But if you could invest in your friend's brand or other things that you know about and see potentially better rewards, I think that's potentially transformational to the economy, to small business, to entrepreneurs. Venture capital and all that stuff becomes, seed funding, all those things become much more accessible potentially through NFTs. So I disagree with Richard Hart's take on that, but I think it's probably good that he does have that perspective and message for a lot of people, because to me it looks like a lot of the NFTs that are out there, as you say, like the founders don't dox themselves or they're like anonymous, and there's every chance, and it happens over and over again, that people disappear on their projects. So that's really a concern, and it's probably better for most people not to get involved, like in terms of buying or putting a bunch of money in. But it's never a bad thing to learn about it and think about where they're going.
Yeah, it's one of those things where, like, I mean, NFTs in particular, as far as like regulation goes, it's kind of hard to know like what's going to happen with the regulation, because first, like technically they're considered property at this point. So however governments want to regulate that is it's kind of up in the air. But NFTs, as far as use cases go, I mean, there's definitely like things that we haven't even thought of, and especially for like entrepreneurs and small business. I mean, it's one thing to have just like a JPEG, and I get what Richard Hart says about having a JPEG that's like kind of loosely related to the blockchain, and having a serial number that's loosely related to the blockchain. Anybody can just go duplicate that picture. And to that point, I do agree. Like, I mean, even my NFTs, right at this point, they're just pictures. And so, and it's all speculation, but at the same time, crypto's all speculation right now. Yeah. And then on top of that, the NFT ecosystem is so massive and will be such a massive thing, especially when you have things like the metaverse come in, because everything in the metaverse, like, are going to be NFT'd. If you have clothes that are in the metaverse, if you own a bar in the metaverse, or if you own property in the metaverse, those are all NFTs. So there's more just use cases to it than just a profile picture, right? And so what I think Richard has a hard time with is just the profile picture aspect of it, but he also recognizes the fact that, like, look, there is a market here, and it's a massive market, and there's going to be lots of use cases for those NFTs. So rather than trying to like shun NFT holders and NFT people away from specifically the Pulse chain, which we can get into, you know, we want to like obviously bring that to the ecosystem, because it's going to just bring in more users and more liquidity.
Yeah, I think a Hex or a Richard Hart NFT would be phenomenal, and Richard could give massive value to it. Like, that's the thing. Like, it doesn't matter what the art is if that NFT entitles you to be on exclusive live streams, or he's doing he did that party in London, those sorts of things. You can say, well, it's only like he doesn't care about that. It's only about Hex tokens, but it's the same thing, right? If it's $1 million to have one of the 10 Richard Hart NFTs, and you get to be in a Telegram with 10 other guys, then that's valuable. And, it depends how you use it, right? But I still think it's probably a good message for most people, because, if they stop hosting that NFT on then on a server, then the image is gone. And OpenSea doesn't really seem that convincing to me. I don't really like that there's a lot of like duplicate projects on there. Obviously the gas fees and all that stuff. Like, there's a lot of sketchy stuff in the NFT world that probably better for most people, to stay away from.
Yeah, I mean, it's just like any other project in crypto. It's like, you just got to make sure you do your research on the NFT project, you know if somebody's doxed or not. I mean, those are like the biggest red flags. Like, if there's an anonymous team, if the project seems kind of scammy, as in not a lot of people who are in the Discord or the Twitter,
or too many people, and they don't actually really say anything. It just seems to be a weird loop of people saying good morning to each other. There's so many fake Discords as well. It's like, a friend sent me a project, and he's like, "Oh, look, this Discord's gone up by 10,000 every second day." And I went and actually looked in the Discord. I'm like, "There's no one here. This is completely fake."
Yep, same thing. It's like you just got to do your diligence and just do the research, do the work to find out like what a project's all about. Look at their roadmap, look and see what their future plans are, right? And then you can make the decision if you want to throw a little bit of money into them, because they can be fun. It can be fun to collect them. It's kind of like Pokemon cards way back in the day.
It's collectibles.
Like
collectibles have been a thing for a long time, and they're here to stay. And it's good to look at and understand what's going on before you like anything, you don't want to put a lot of money into something that you don't really understand that much. And there's a question here about Theta Drop. I'm not sure if you've looked at Theta Drop.
Theta Drop? Are you talking about Theta? There's a coin called Theta, but is there Theta Drop? Is that a specific NFT project that they're referring to?
Well, it's actually like an exchange. It's almost like a centralized exchange for NFTs. So it's a curated exchange on the Theta network, low fees, and only select projects are on there. It's really set up as like a consumer-facing NFT marketplace, where OpenSea is more like for developers and crypto guys, where Theta Drop is a curated place for drops. So they had a Katy Perry drop, and Theta's play. I'm interested in the Theta project, and so that's probably why one of my someone who subscribed to me is also interested. So I bought they have a project called Secret Pineapple Society, which is a guy who worked with Hollywood animations for movies and stuff. So he did the art for it. So it's really cool art.
Wow.
And they've kind of been like, they're kind of the blue chip NFT project on Theta Network, which is quite an obscure network at this time. It's been top 10 at one stage, but I think it's number 40 or so at the moment project. But so yeah, that's Theta Drop is an interesting one. It's sort of like more set up for the next wave of adoption, more so than currently people who are on in cryptos, and that's kind of how I see it. And yeah, it could work well for like movie stars to have a really hands-off approach to getting their NFTs to market. That seems to be what they're working towards, like more celebrities. They've also launched a ton of avatar type projects. Most of them I'm not really in love with, but the Pineapples one was quite cool, and it seemed to capture like a lot of the hardcore people in the Theta network. So it has become like that little club of, if you've got one of these, then you're probably fairly early to Theta and you're probably fairly interested in it. So we have our chat group, and it's been a good place. I've met some really cool people through the NFT where I didn't really know anyone in the network before that. So yeah, it's like just one example of how they can work and help you. And even if I don't make money on the NFT, the connections can be valuable as well, right? So you have to look at things, with a zoomed out, open focus. Like there's another project, Gym Bros. I'm not sure if you've seen that one.
I think I have heard about that one. I haven't looked into it, but I think I have heard about that one.
So yeah, it's a gym on the Gold Coast. Well, they're going to build a gym on the Gold Coast when they have 80% of tokens minted, and it's going to be lifetime membership to the gym, and they mint at like $200. So it's really a no-brainer. But for people on the Gold Coast, no, that one's on OpenSea. But yeah, I just minted because I'm into fitness and NFTs, and I was looking at NFTs, and it was like the first one that I'd seen that was doing that. So then I met the guy, and I did a podcast with him, and one of the founders. And so even if I don't make money on that NFT, even if I never end up going to the gym, which I probably will, there's still a win there because I made a new friend, a new contact. Yeah, he's got like 50,000 YouTube subscribers, and he's a cool guy, So you build a connection through these things that it's not just whether the price goes up. More so, like with NFTs, there's more other value potentially there, whereas tokens don't really have that community vibe. It does a little bit at some point, but it's not so clear as like an NFT tells you like I'm into that thing. I think there's something important there. But
cool. It's cool just because you can find a lot of these little gems on a lot of different blockchains, and there's a lot of great projects on these blockchains, and really to the point to where even a seasoned person in crypto may not know about a lot of these projects. I mean, there's just so many opportunities in the space of cryptos, and specifically in the space of NFTs. Not only just like NFT projects, but like game projects too, like metaverse games, land, like digital real estate, and like actual games. Like there's another project on the Solana blockchain. It's called Star Atlas. It's like this like crazy space metaverse game, and it's nuts, and like there's a huge community behind it, and it's kind of like Axie Infinity. Have you heard of that one?
I've heard of it. I haven't played or anything.
Haven't played it either, but it's kind of like that same type of thing where it's just a big metaverse and you can play to earn it. Hasn't come out yet, but the graphics look amazing. It's crazy. So it just goes to show you that if you put the time in, do the research, you can find a lot of these little hidden gems. And like you said, and you can meet some really cool people, and even if the project doesn't do very well, like you meet cool people, you can make new friends. And if you like the art, I mean, a lot of people buy NFTs genuinely because they like the art side of it, because they like what it looks like. So there's that aspect too.
Going into research and speculation, let's look at Pulse Chain and Pulse X. Like, what do you see there?
I see the best opportunity in crypto. Simple as that.
That's a strong statement. So why is it? You've been in this space for a few years now and really looking closely. Like, what's hot there? What's good?
Well, let's start with Pulse Chain. So Pulse Chain is going to be a fork of Ethereum, and nobody's forked Ethereum yet. Ethereum has the most network effect. It's got the most users, the most liquidity as far as any layer 1 solution goes. I mean, I really like the Cardano blockchain, and there's other ones I like too, like Phantom, Solana. I mean, I like a lot of them, but a lot of them have problems. And so what Richard Hart is doing is he's looking at the most successful layer 1 solution, which is Ethereum. It's, as of right now, it's the most decentralized, and he's just forking the code. And so but there are problems with Ethereum. It's not the fastest. The gas fees are insane. It's ridiculous. For any small fish or even medium-sized fish, it's almost unusable, because any transactions you want to do just to mint an NFT is between $30 and $150. If you're trying to do any sort of yield farming, that takes multiple transactions. You have to stake your tokens on a decentralized exchange, and then once you stake those tokens, you'll get what's called a liquidity provider token, and then you have to go stake that. So each time you go through one of those iterations, that's a transaction. So I mean, it's just unusable for anybody who's not a whale. And so what Richard Hart is doing, he's forking that code because there's a lot of good things that Ethereum does, and he's going to improve on it. So first off, it's switching from proof of work. Ethereum is proof of work. Pulse chain is going to be completely proof of stake. So it saves the environment. It's green. It's much more energy efficient. It's faster, and it has extremely low gas fees. I mean, like less than pennies. So there's going to be anybody will be able to use it, especially people in the NFT space will be able to use it, and it's going to be amazing. It's going to be probably one of the most secure networks. And we can make that assumption because Richard Hart has another project, his first project called Hex, which Hex has had 100% uptime at this point. There haven't been any problems with it. It's actually a proof of weight concept. So that means it's a proof of work and a proof of stake concept. The only reason why it's proof of stake or proof of work is because it's technically an ERC20 token, which means it's on the Ethereum blockchain. And Ethereum as of right now is proof of work. But it's proof of stake in the fact that anybody who stakes their tokens on Hex can mint their own rewards at the end of their staking maturation period. And so if we just look at his track record, he already has created an asset, the highest performing asset in crypto. It's done a 10,000x. If you measure it from a certain wick on the chart, it's done a 10,000x. And he's the type of guy that, I mean, he's doxed himself. I mean, he's on YouTube all the time. He talks to his community all the time. So there's a lot of green flags that go up when you look at when you actually go in and look at the protocol and you look at the fundamentals, the tokenomics, the way it works. There's just so many green flags about it. And the fact that he's making a fork of Ethereum, it's just it makes a lot more sense. People can understand what a fork of Ethereum is. It's like he's literally just taking the Ethereum and creating his own layer one solution based on that code and making improvements to it. And so that in and of itself got a lot of people excited, and they can understand that idea versus something like Hex, which is what they call it is a certificate of time deposit. It's just a way to monetize time in a very compounded way. And we can get into that in a little bit if you want. But the fact is that the Pulse chain is also it has yet to come to market. So you literally have an opportunity to like get in probably one of the greatest crypto assets that will ever exist on the blockchain. And you can get into it before it even comes to market. I mean, you can't ask for a better opportunity than that. And then on top of that, it's going to have its own decentralized exchange, which is if for anybody who doesn't know what a decentralized exchange is, it's like Coinbase. Coinbase is a centralized exchange, except it's decentralized, meaning there's no middleman running the exchange. It's purely peer-to-peer, and that provides opportunities. So we've never seen a decentralized exchange that has as much liquidity locked up or as much liquidity sacrificed for a decentralized exchange that hasn't even come to market yet. It's the asset itself is actually going to be deflationary because there's what's called an AMM fixer bot, which goes in and actually, well, we can't say that it's actually going to do this because we can't have any expectations of profit from the work of others, because that would be considered a security by the SEC. But what Richard says is that by not having expectations, this fixer bot may or may not purchase the PulseX token and then burn it, which means that the PulseX token in itself is deflationary. And we've never seen any decentralized exchange in the crypto space be deflationary. All of them are all inflationary, meaning they can just mint their tokens to oblivion, and that obviously puts sell pressure on the asset itself, which makes the price go down.
Yep.
So, and I'm just scratching the surface here. I mean, there's so many green flags as far as these projects go, and the only reason why anybody would say anything bad about it is just because they don't like Richard Hart, because he can be a type of character to get used to. But once you kind of peel back the onion layers and really see him, like who he is. For if you just watch a lot of content on him, you can see that the guy's actually genuine.
How did you react when you first started watching Richard Hart's videos? Was that how you got into Hex, or was like someone else that was already bought in, or how did it start for you?
Actually, I found out about Hex through a leverage trader, a very popular leverage trader. His name's CryptoFace. Have you heard of him?
No.
Okay, so have you heard of BitBoy Crypto?
Yeah.
Okay, so BitBoy Crypto is very good friends with this guy CryptoFace. CryptoFace is like a world-class leverage trader. He's very, very good at it, and he has his own indicator that he sells to people or whatever. So I when I was leverage trading, I had bought that indicator. I was in his community, and that's how I originally heard about Hex. CryptoFace did an interview with Richard Hart, and I saw that. I was like, wow, this really makes sense. I did some more research on my own, looked into the project itself, did more research on Richard Hart, watched more videos, and at first what I thought, I was like, man, this guy seems a little egocentric, a little like full of himself. But then, like I said, once you start watching more content on Richard, you'll realize and you'll find out that he really doesn't enjoy like buying these crazy things like $50,000 bags and just all this outlandish stuff. He's just doing it as like a marketing stunt, because it does attract eyeballs. So, but once you see enough interviews about like what he does, enough live streams, you can see and feel his intention behind what he's doing. And that's, once I found that out, I was like, all right, it's a done deal.
What do you think is the deepest intention there?
I think he wants to leave this world better than he found it, and I think he wants to win a Nobel Prize. And I honestly think that his the 3 assets he has right now are Nobel Prize worthy. I really do. Specifically Hex, because Hex is it's a new concept. It's like it's kind of like if you were able to buy Bitcoin back in the day, right? Back in 2008, 9, 10, when it first came out. That's what in my opinion, that's what this opportunity is like, because it's a new technology in the crypto space. There's nobody else that's been able to monetize the value of time.
That triggers Bitcoin maximalists so hard that if you go and watch some of the interviews with Richard Hart, you'll find some of the most conflicting conversations. Richard actually does an amazing job of staying calm in 99% of those conversations when he's being attacked from all angles, and everybody said that he was going to disappear with all the money, and nobody should invest. And then those who did have faith and did understand it and did go in, a lot of them are now doing pretty well.
Yeah. Yes. I mean, he's a great debater. I mean,
Phenomenal.
He knows his stuff. Like he's been in blockchain since, I mean, he was minting Bitcoin, and he was buying Bitcoin and mining it way back in like 2010, 11. Like, he's been in blockchain a long time. He has the experience. He knows what's good, what's not. I mean, he's just, because like, it's like when you're an expert in something, it's like, what works and what doesn't. Like, if somebody has been working out for, probably as long as you, or, for several decades, like, they know what works and they know what doesn't work. It's the fact that they've just done so many repetitions. It's the same thing in crypto.
It's funny to see how many people, even like, I've mentioned it to people who they're not Bitcoin maximalists, they're not into Hex, but if you mention Richard Hart, you mention Hex, like the first thing they think is scam. Yeah. And to me, if you're into crypto, especially altcoins, and your first reaction is scam, then to me it says like they've just been brainwashed and haven't actually thought deeply about what a cryptocurrency is. Yeah. Because almost all the cryptocurrencies are based on speculation. Like, its price goes up, and even Apple and Google and Tesla, I think, Richard Hart really brought my attention to that, of like, you're not actually getting a share of the profits. What you're getting is access to speculation on a huge brand. And if the price goes up, then people like it. And if the price doesn't go up, then people don't like it. Like, yep. And there's brand power behind it. It's been, I've watched a lot of his stuff, and it's really changed my view of the world of cryptos and understanding of Bitcoin, especially in terms of it is still inflationary, and there are issues with it. There are problems with it. It is difficult for it to double now from where it is.
Yes.
It's more difficult
it's so
for
heavy.
it. than a lot of other coins. So it's been really cool to hear. There's he has deep knowledge and experience, as you say. He's able to speak about the technical side of crypto that you don't hear anyone else speaking about in that way. Like, he's able to bridge where he's popular enough and accessible enough that it's not some developer's channel that no one wants to listen to, but he shows you as well when he's talking to the Bitcoin big guns that he knows how it all works.
Yeah,
no, totally. Yes, it's very powerful. The thing with the Pulse and Pulse X, there's been a sacrifice of over $1 billion, right?
Just for Pulse X. There's been an additional over 600 million sacrifice for Pulse Chain. So Pulse X, and a lot of there's been a lot of speculation that the reason why there was a higher number sacrifice for Pulse X was because there's a lot of people who didn't sacrifice for the Pulse Chain, who now wanted an opportunity to get the same rate for, Pulse X tokens to Pulse Chain. So what the speculation was, once the mainnet goes live, once Pulse Chain comes out and goes live, that a lot of those investors would trade some of their Pulse X tokens for Pulse Chain tokens. But that was before Richard Hart announced that there's going to be single-sided staking for the Pulse X token. And you can earn the incentive token, which we don't really know much about at this point. But the fact that he just mentioned that alone, where you can earn something based off staking your Pulse X, is kind of changed a lot of people's strategy as far as how they're going to acquire Pulse Chain at this point.
Has he given any hint as to the APY?
No, I don't think so. I don't think it's gotten that granular yet, as far as the specific details. But the fact that you can have an opportunity, because the thing with Pulse X and Pulse Chain, you can stake and delegate your Pulse Chain tokens to a validator, and that validator earns rewards by validating the blockchain, by validating the transactions that happen on the blockchain. They earn Pulse Chain tokens for doing that process, and then they also share that income with any not validators, delegators who delegate to that specific node, that specific pool, if you will. And so the fact that you can just stake on both chains is also a huge advantage to something like Ethereum now, where Ethereum now, the way it works is you have these miners who go in and have these heavy rigs that take up a lot of electricity, so it's not environmentally friendly. And then what happens is they have these overhead costs. They've got to pay for new rigs, so they've got to pay for their electricity costs. And so whenever they mint their Ethereum for validating the blockchain and making sure that the transactions are accurate, they get paid in Ethereum. Well, once they get paid in that Ethereum, then what happens is they go in and they dump that Ethereum on the market for fiat currency so they can pay for their overhead costs. That completely goes away in the Pulse chain. So that's why it's such a revolutionary technology. It's why it's going to be one of the best layer 1 solutions, because it's and Ethereum is trying to go away from it, but the fact is Ethereum has so much network effect and it's so heavy at this point, it's hard for them to change the fundamental code of Ethereum. And so that's a huge advantage for Pulse chain, is before Pulse chain even goes live, all those problems are going to be taken care of. So the fact that you can even just stake in general is a huge advantage. And on top of that, at least in the United States has come out and said that they're not going to, it's not a taxable event to have any sort of token that's staked, is not a taxable event. So as long as you don't trade that asset for a different asset, that would be considered a taxable event. But simply staking your tokens and earning a reward, earning yield on it, they've come out and said it's not a taxable event, which is awesome.
Is that actually through the regulators, or is it like a proposal? I think I saw something about it.
I don't know if it's a proposal, but I know that it's been officially announced. If it's gone into law yet, I don't know. I don't think so, actually, because they haven't regulated crypto. But that's it's an official statement. Yeah.
Okay. Yeah, it's important. Like, there's so many people and so much money now being staked. It's like eventually the government has to say what it thinks about that. Yeah. So, yeah, there's so many angles that people can play then once you have that ecosystem of potentially 4 tokens there. If you have the PLS, PLSX, Hex, and whatever the reward token is going to be for staking PLS, that's going to create even more velocity and engagement with the community. It seems as though that community engagement is probably the biggest piece for any cryptocurrency that doesn't have clear real world utility, which includes Bitcoin, right? Like Michael Saylor's on all these YouTube channels talking about Bitcoin because that's how Bitcoin maintains its price or goes up, is by people advocating for it. And they have the Bitcoin conference and people form their identity around it, and therefore that supports the price. That's one of the things that has intrigued me most about Hex, is like there's a really strong community here. The guys that are making videos on YouTube, everyone seems like good guys. Like I've seen a bunch of different interviews and seeing there's been a bunch of 24-hour live streams, and there's like 24/7 support in the Telegram channel on PLS, on the PLSX, or all the channels have like someone on a call pretty much all the time. Community supported stuff. The community's developing a bunch of stuff, but on the marketing side as well as on the technical side, people are building websites to make it really clear, like what's happened with it, all the charts, all that stuff has like blown me away as a community-led money. Like it's money because you can go and change it into US dollars or whatever you want. And yeah, you can't take all of it out at once, but that's the same for any currency. Yeah. When people throw their funny scenarios forward, right? But to look at the strength of the community, like that's really what makes Pulse and PulseX so exciting. Is people look at Hex and they think, oh well, I was wrong about that. I wish I had have listened, and okay, I'm not going to make that mistake twice. If there's any kind of positive price action, think about how many more people are going to be YouTubing and streaming, and because they're going to pick up the vibe and the method of the Hex community, and you can already see it happening. That creates such a powerful network effect that hasn't happened with any other crypto coin that I can see. Yeah. Is that all fair to say? What's it like being on the inside of that?
Yeah, no, it's completely fair to say. We're very, very early. I mean, again, Pulse Chain hasn't even gone live yet. And like there are crypto YouTubers that are, famous in the crypto space that mainly focus on one chain, like for example, Cardano or the Binance chain or like Ethereum. There's a lot of like clout in those, and especially in the Bitcoin space, there's a lot more clout there because it has more network effect. There's more liquidity in it. So you have more people that are naturally creating content around it. Well, the fact is that like most of the community, most of Hex and the Pulse chain is community driven, meaning most of the marketing that's done by it, most of like the outreach and the word of mouth to spread the word about Hex and Pulse chain, it's really all done by the community. A lot of it. Richard does do a lot. He does spend money on marketing. He just bought a diamond for like 4.3 million. Biggest cut diamond, weighs like 555.55 ounces or something like that, something ridiculous. So he does little stunts like that to help, but most of it's driven by the community. And most YouTubers, I mean, I think the most subscribers any YouTuber in like the Pulse ecosystem or just the Richard Hart ecosystem is like, with the exception of Richard Hart, he's got over 100,000. It's only like maybe 10 to 20,000. Like Crypto Coffee, I think, is up to like 16 or 20 or something like that. Yeah. But we're still very underground, if you will, and it's crazy that you see like $1 billion of monetary energy invested in something, but it doesn't get the exposure of like, it doesn't get like the news headlines. It's like how is that not happening right now? So the fact is that it's only going to get bigger and better. And not only that, once there's other projects that come into the Pulse chain, because you have to remember Pulse chain's a layer 1 solution. That means there's lots of different projects and different ecosystems and developers who will eventually come into the space once it launches and people see how amazing it is, who will start developing on the blockchain and developing new projects and new ideas and new innovations. And us as a community have a chance to cover all those great projects and just spread the word even more. And so like literally that's why I say it's like the best opportunity in crypto.
Yeah, I can see that if someone does build a project on that platform, then you have immediately a very vocal group of people who have made a lot of money on Hex who are ready to buy. Like you can see that with Pulse and Pulse X, people are ready to buy. Like if there was NFTs, if Richard Hart liked NFTs, then guys would be buying NFTs for each other's stuff and within the community, like left, right, and center. Like they're ready to invest in stuff within their own network. And so that makes it super attractive, I think, for development on that chain. It's going to be really, really interesting to see that layer 2 stuff, given the viral kind of networking effect. And as you say, like it's small, but in terms of Crypto Coffee with his 20K, but it's vocal and like it's the potential there for something to go exponential quickly in terms of investment, I think is probably higher than in a lot of places.
And we are like, I'm telling you, we are like this close to like virality, like major virality. And the reason I say that is because I was actually in a Twitter space today with a guy. So for anyone who doesn't know, Richard Hart is doing a debate with Peter Schiff. Peter Schiff is
I heard that, yeah.
He's a massive. He's been in the finance sector for a really long time. He's a big gold advocate, and he's a big cryptocurrency slanderer. And so Richard Hart, the guy who set up Richard Hart and Peter Schiff to debate, his name is Funding Jim. He's on Twitter as Funding Jim.
I've seen that.
I was in a Twitter space with several people, and he was talking in the space today, saying that like not only like was he able to go to these certain events with like big time celebrities there, a couple names he threw out was like Robert Kiyosaki, and then he mentioned this other guy who he didn't know who he was, but he rolled up in like a Ferrari and like looked kind of like Richard, and just very, very like wealthy people. And then he wanted to set up a meeting with Gary Vaynerchuk, of all people. So like there are people in the Hex community, Hexicans, who are connected with like major influencers who, and we can kind of, and I reason say that I say that we're like this close to like virality is because it's almost like we're such a big community of people that are spreading via word of mouth instead of like the traditional advertising ways of like, you know, TV and you know, YouTube and whatnot.
Magazines.
Magazines. We're kind of like skipping all that and going straight to the people that, intelligent people who can see value for what it really is. And so the fact that the Hex community is so connected, if we just get a few of those big players, I mean, it's just going to be like a snowball effect where one big player joins, another one joins, and then it just takes over. It's just going to be like this massive snowball effect. And, it'll just be something that has never been done before in the crypto space. So again, like I said, we're in not only is crypto in its infancy, but specifically with Hex, Pulse Chain, and PulseX are even, how would you even say, like infancy or whatever? I don't even know how you describe that, but it's such a massive opportunity.
Have you looked much into the history of money and banking?
A bit. I'm not like a Peter Schiff type of person. I mean, I understand most concepts. Like I understand like the fractional banking is a joke. I mean, the fact that like banks, for example, can take somebody's money and then go lend it out. Like I can't remember the percentages they can lend it out, but they only have to have 10% of that money in the actual bank to give back to it's just like it's so broken. And the fact that the government can just inflate dollars. I mean, the funny thing is that people call Hex a Ponzi scheme all the time. Like, oh, it's a pyramid scheme, it's a Ponzi scheme. But really, if you think about it, the United States dollar and really fiat currency is all a Ponzi scheme as well, because these governments can just print the shit out of it and inflate it to oblivion, and like we're just expected to do nothing about that. I mean, and it's centralized. I think there was a tweet that I saw recently that said, I can't remember exactly what the stats were on it, but it gave out these funny stats about a crypto coin, and it was like, oh, it has like this amount of inflation and just all these like negative attributes, and then it's like this, nobody would ever buy this crypto coin, and then at the very end the punchline's like, oh, whoops, that's the United States dollar. It's a joke.
Yeah, the US dollar is the ultimate shitcoin when you look at it from that perspective of the inflation of supply, but it does have a very strong network effect where the whole world thinks that it's the real deal, and people say it's backed by the military as well, but I'm not too sure about how that really works. But this is like, I think it does get to some really deep fundamental stuff about how power works for humans as well. So that's what's really, can they stop this? Maybe that's part of the reason why there can be $1 billion invested in this thing and nobody cares. It's not in any of the financial magazines. It's not, it doesn't get a mention. And like, there's been a big effort to kind of slander since the start. So as it has more and more money, it seems as though Richard Hart is like wanting to prove himself right for actually being able to create all this stuff that he wanted to see if he could create. I don't think even he knows if it can work, but it's working if you look at the numbers, and it's going to be pretty hard for Peter Schiff to argue against the many billions that he's created, that have been generated, and people are cashing out millions of dollars who didn't have millions of dollars before, so they can go and buy a truckload of gold if Peter Schiff does a good job on the debate. So it is real, it is happening, and it's putting in question the current system in a big way. It's that's that question of whether it can sort of go viral and go and eat up a lot of the world's wealth. Michael Saylor's talking about the same thing. If Bitcoin was to go and eat up 10 billion in wealth, as like it's gone. They're not talking about it for medium of exchange and all those sorts of things anymore. It's more the store of like property, isn't it? Digital property is like the new narrative, and I think digital energy is the one that's above that. But it's where this stuff is all going to go in terms of the impact on humanity is one of the most interesting aspects, and what it does for personal freedom and personal power. You have to look at the people who've been on this journey, and they talk about the experience, the way it's impacted their lives, whether they're Bitcoiners or hexagons or whoever it is. If you get a big win in this field and you understand what's going on, you don't want to go back to the government dictating your money. Exactly. You're not interested in central bank digital currencies, and that's the big thing that's going on, right? And then hopefully we don't divide so much and wage war on each other as so much in the crypto world that it has a negative impact on the growth and adoption. Like that's
a good point.
Yeah,
that's
it's
really
one of the
point.
things.
Tribalism can be it can be good, but it can also be very, very bad. So it's, and I always say, like, I like communities who have some tribalism, like who really believe in something. Like the Hexagon community is a perfect example, but when it gets out of control, where it's like this tribe versus that tribe, the Link Marines versus the XRP army versus the Ethereum, maxis versus Bitcoin maxis. It's like when you get into like those debates and those, I think it's okay to get in debates, but like when it gets personal, I think is when tribalism really has diminishing returns. But I do think it's good to like have the camaraderie aspect of it. And then on the topic of CBDCs, obviously I don't like CBDCs in the fact that like I would never invest in a central bank digital currency, but the fact that central banks are now starting to get on board with digital assets in general, I think overall is going to be a good thing, because it's going to allow people to onboard a different way. And once people onboard into the crypto space and they start seeing the power of digital assets from like a central bank aspect, eventually they're going to start seeing other assets like the Bitcoin, like the Ethereum, and it's kind of like what's the word for it? Like a gateway drug, right? It's kind of like that entry, that low barrier to entry. People can feel safe about it, but they kind of get the exposure of having a digital asset, and then once they kind of get used to that, it'll naturally they'll start searching for other digital assets, and they will start understanding it in their minds to a higher degree, which will eventually lead to Bitcoin as well as Ethereum, and then eventually the Pulse chain.
Yeah. What do you think is the next big thing that you're going to see outside of the Hex Pulse community? What else have you got your eyes on at the moment?
I really like the Cardano blockchain, and there's a lot of projects in the Cardano blockchain that I really like. Like there's a DEX that just went live, Sunday Swap. It's like the main DEX on Cardano. It's kind of like the PulseX decentralized exchange, but it's just on Cardano. The thing with Cardano is it's a little bit more decentralized in the sense that they're like, well, I don't know if I can go that far yet. It's a little more. They have a great community. So first off, I do like the fact that they have a very strong community. I also like the fact that Charles Hoskinson, who's the founder of Cardano, he has a very big vision and goal of trying to bring the entire continent of Africa onto the internet, essentially, and onto the blockchain, and allowing arbitrage and allowing entrepreneurs such as ourselves to use the Cardano blockchain to like lend money to people in Africa so that they can go build like brick and mortar businesses or just any sort of business and just start getting that economy onto the new age internet, essentially. So I think it's a very lofty goal, but I think they'll do it. And so that was kind of what got me into Cardano to begin with. But there's a lot of projects on Cardano that are starting to emerge now, because their smart contracts just went live in September of 2020, and they've only been live for 4 or 5 months. And so they've got a bunch of decentralized exchanges coming out.
2021 was it?
Yeah, sorry, 2021. That's right. Man, time is going by so fast.
Yeah.
So it's only been a few months, and you're getting a lot of these decentralized exchanges that are now coming on the blockchain, starting to allow people to yield farm and take advantage of the benefits of what a decentralized exchange does. And then on top of that, their NFT ecosystem is starting to ramp up as well. I've got a project on there. There's several blue chip projects on there. Really, really good use cases for them as well. And then metaverse gaming is starting to get big on Cardano too. So there's little like small niches in the Cardano ecosystem, and really in most layer 1 blockchains, that you can kind of like cherry pick. If you can master that one space, like if somebody were to, for example, go into like the metaverse niche, or like we'll just call it crypto gaming niche, right? If somebody were to master that area, they'll know when all the projects are gonna like moon, for example. They'll know when to get in and when to get out of them. And so to get into crypto, you don't necessarily have to be like this genius who knows everything about blockchain, everything about like the technical side of crypto. If you just master like one area and get really good at that area, and you know the players, you know the developers, you know the good projects from the bad, it gives you a really, really big advantage in that ecosystem. So that's one ecosystem I really like. Another one I like is Phantom. It's another layer 1 solution. And then another one that I like that is really unknown is one called Dusk Network. And their focus is it's more on the lines of regulation. So they're building a layer 1 blockchain. It's very, very complex, and I don't even understand it all myself. I've read the white paper, but it's very, very hard to understand, like from a technical aspect. But what they're essentially trying to do is create the first layer 1 blockchain that is regulatory friendly. And specifically, I think they're in the UK, I think. And so they're building a blockchain that will be able to be used by a government, essentially. So it's kind of a hedge play, more or less, but it's a really cool blockchain, and they have some of the best cryptographers in the crypto space in that project. So that was one it's very very underrated. There's no coverage on it. So that's just a very, and I think the market cap right now on that coin is actually, let me take a look at it real fast. I have it right here.
Yeah.
I think it's less than 100 million if I remember correctly. It's number 321 on the, let's see. Nope, it's more than 100. It's 176 million market cap right now. But, it's a layer 1 solution. Most layer 1 solutions are in the billions of market cap. So that one, it's a gem for me, for sure.
Going back to Sunday Swap, is that what kind of rewards are they offering there? How's the structure in terms of people who are providing liquidity? Have you looked into the details there?
Yeah, so we can go to their decks right now. They only have 3 pairs as of right now.
You want to pull it up? Or?
Yeah. Hang on. There we go. All right, so go to Sunday Swap. All right, let's go to swap. Actually, no, let's go home. So they only have a few pairs right now. So they have Sunday ADA. ADA is Cardano's native token. They've got this token called Liquid ADA, and then they got the World Mobile token and ADA. They were gonna have one with who is it? There was another token that they were gonna have a liquidity farming for. And but there's like some lawsuit going on between Sunday Swap and them. It's some crazy stuff that's happening. But
is Sunday the reward token then for those providing liquidity? So if you you have to buy some Sunday to be able to effectively stake your Cardano, and then what kind of you get paid in Sunday?
You get paid in Sunday. Yep. So right now, let's see. Let's go to this one. I don't think it shows the rate on here.
Yeah, that's cool.
Yeah, I don't think it shows the rate on here as of right now. But the cool thing about Sunday is if you stake your Cardano, because Cardano, the other is it's proof of stake as well. It's not proof of work. Yep. So if you stake your Cardano, you can actually, I'll close this. So if you stake your Cardano, you can actually, in a certain pools, you can stake your Cardano in certain delegation pools, and there's delegation pools that are Sunday Swap approved, and if you're delegating to those pools in a Sunday Swap approved pool, you'll actually earn free Sunday Swap. It's kind of like an airdrop, but it's instead of like an actual airdrop, it is an airdrop, but you've got to stake your Cardano through that pool. So I'm doing that, and you can get free Sunday Swap tokens for it, and then essentially use that Sunday Swap to yield farm if you want to.
Yeah. So what percentage returns does Cardano? Is there Cardano staking? There's Cardano staking through the app, isn't there? Or like a kind of another way of staking Cardano directly.
You can do it through the wallet actually. So there's two wallets. Yeah. There's Nami. Well, there's several wallets. There's Adalite, Nami, Yoroi is another one. And then there's also Daedalus is like their main blockchain wallet. I don't like Daedalus. It's a little clunky, kind of hard to use. So I use Yoroi and Nami, and you can actually stake right from the app those wallets themselves.
What sort of returns do they offer on that? Do you know?
Yeah, so depending on the pool, if you stake with like a pool with less liquidity, you'll earn more, but it's not as much as, for example, like a Hex or anything like that. It's between like 5 and I believe 15%, somewhere in there. So I think right now it's like I'm getting like 7-8% return.
Yeah. And is it non-custodial staking? Like you don't actually hand over your coins?
No, it's all non-custodial staking. So you still, it's your wallet, your keys. It's in a wallet that you hold the keys to, and then all you do is you just go in the wallet, and they have like a protocol in there where you just type in the name of the pool you want to delegate to. You can stake and unstake whenever you want to. There's actually no penalties for unstaking. So like it's not like Hex where you're going to pay a penalty for unstaking. There's no locking period or anything like that. There is a refractory period where, like, as soon as you stake with a pool, there's a little bit of a time delay before you start earning the actual reward. So it's 1 epoch. If you know what an epoch is, it's like the time it takes for one block of chain to close. So the blockchain in current time is going, and anytime, like for example, like a validator would go in and verify that block. Once the block is completed and closed, that's when the next, that's considered an epoch, is when that, or epoch, some people call it epoch, EPOCH, I call it epoch. And that's what it is. It's just anytime a block closes.
Yeah. Okay.
So when you stake your Cardano, you have to wait one full epoch, one full block to close before you start minting your rewards the next time. And 1 epoch takes I believe 3 days or so on Cardano.
Okay. All right. Yeah. That's the kicker. So yeah, it's a similar sort of deal with Theta, except the staking starts immediately, but then to unstake, there's like a 2 to 3 day wait when you unstake, but no financial penalty, just like that kind of cooling off that stops you being able to impulse buy. If you have your coins staked, it gives more like certainty to the network, doesn't it? If there's less liquidity. Yeah, so that'll be interesting to see how that pooling works out, what the deal is there with the Sunday and ADA. I've been looking at it. There's actually similar stage of development with Theta. They've just got their first decentralized exchange come online, and they've come up with a pretty innovative path for being able to stake T-Fuel, which T-Fuel is like the gas coin kind of on Theta.
Doesn't Theta have a streaming platform?
Yeah, so that's what people get confused about. Like they look at.
Or is that something else?
No, it is, but there's Theta TV, right? And Theta TV is a place where they can kind of play around with their technology. So if this was on Theta TV, if I ever learn how to stream directly there, probably will be. But someone could just hit to drop T-Fuel, to us as we're, if they're enjoying it as they watch. So it's that kind of stuff is integrated into Theta TV, but Theta TV is not trying to take over from YouTube or any of that other stuff. It's more of a place to put their technology to work, to show different gaming platforms, Twitch and all these, YouTube itself.
Yeah.
This is what we have to offer, this, and so they develop their technology, and it's got a lot better. But it's not really what Theta is. People think, Theta TV is trying to take over from YouTube. It doesn't look that good. Therefore, I don't like Theta. But that's it's 0.1% maybe of the project is Theta TV. It's not really what it is. It's just a place to kind of play around with some of the stuff. But
I think I actually downloaded it and set up a node on my computer and everything. I haven't used it though.
Yeah, so I think that edge node is where you get paid for relaying data. So people say that the last mile problem is a big barrier to going into this VR metaverse type age where we need better data streaming, and 5G towers is not going to work across Africa. You're not going to put a 5G tower every couple of 100 meters, and it's just not a solution. So even with Starlink, the more we can economize the amount of data that needs to be sent. So say everybody's watching a UFC fight. How many people in New York are watching that UFC fight? Where's it getting streamed from? So it's getting streamed from Las Vegas, and it has to get sent a million times every second. The data is being sent from Las Vegas to New York, where the Theta edge node system would allow that data to be sent, say, 500 times to different edge nodes, like your edge node, and then you would get paid for relaying that to all the people around New York.
That makes sense. So
500 trains going from Las Vegas to New York versus a million trains of data, and so every time Apple does an update or something like that, they could send it out, they can send out to the edge nodes, and the edge nodes will do the work. Now, the thing is, the infrastructure is all really in place, and the micro rewards and all that stuff it all works, but it hasn't received that next level of sort of mass adoption. So Theta's play is to work for Netflix and Amazon TV and all those kinds of companies to give them cheaper data, because it costs a lot for all the data that's being sent around the world with the YouTube has to pay a lot of money. Yeah. Google pays a lot of money so Theta can decentralize that, and in effect it's greener because they don't have to use these massive data relay centers. They can use anyone's smart TV, phone, computer, and the person can earn money as they send the data around. So the concept is big, and it has like real world utility, where it is like a utility company where most cryptos don't, you can't really make the case of, well, people are already paying for data relaying services and internet services, and this is wanting to get a piece of that market. So
I'll have to let me add that to my watch list.
Yeah, it's funny because it's when you talk about Hex and all the Hexicans, Theta's got like 3 YouTubers, and there's really no like buzz in the Theta community. Like some of them might take offense to that, but the Discord is like there's nobody, and they're really cool people, but it's just nothing like with Hex. But it is because Theta doesn't care so much. Like, maybe that's wrong words, but Theta isn't so interested, it seems, in a ground up kind of movement. It's more interested in like working with Hollywood and Sony. And so if you look at like the companies that are invested and the advisors, it's all like huge companies. So their partnerships are all with big companies, and then that's where the money's going to come from. And so it's a really different dynamic socially to a lot of other cryptos.
Interesting.
But the recent the decentralized exchange play is huge, because a kid playing on the PlayStation doesn't want a KYC to be able to interact with NFTs and token rewards and whatnot. So obviously DeFi is a huge part of the crypto space, and this new decentralized exchange is like a token that's pinned to T-Fuel, which T-Fuel is the primary token for transactions, and you also pay the gas with it. But like, say if you buy an NFT on Theta Drop, then you pay in T-Fuel. So it works as
a native token.
Yeah, and so the Theta token is like the governance token, and then T-Fuel is for the transactions. But this new one, T-Bill, has come out to allow you to stake T-Fuel with like 50% APR, and they've released NFTs with it that is at ×2, so you can actually get 100% APR, not APY but APR, like before compounding on T-Bill. So it's a really interesting one because it has non-custodial liquidity. You can provide non-custodial liquidity, and like I've just been really researching it the last week or so. I think it came out maybe 3 or 4 weeks ago, maybe a little bit more, a little bit longer. Theta? But it's super interesting stuff to look at. Like, as you say, there's so many projects and there's so many things that are popping up. If you can find something that makes sense in a relatively early period, then it can be potentially life-changing. Like, when you look at the numbers, it's huge. But with Hex, like, quite a bit of the pull is like the 38%, right? But the 38% is not really where the gains came. The gains came from mass adoption from the coin price increasing from fractions of a cent to 20 cents. Like, that's the kicker. So the percentage interest is what gets people interested. They think, oh yeah, if I can get this return on my money, then that's great. But it's really the adoption to the project that is where the huge gains come from, right?
It's the game theory, really. It's because, I mean, that's all part of the game theory, because the more people come into Hex because Richard, he's addressed this a few times. He says it's almost easier to market the 38% APY to like the masses. Yeah. Because if you tell them, well, it's done a 10,000x, like the assets, then it's like, oh yeah, it's a shit coin. It's people just can't wrap their mind around those big of gains. But you say, you can earn 38% APY on your money. People are like, oh, that sounds great. Then the game theory comes in, because if they want to earn that APY, they've got to lock up their hex for a longer period of time. Longer pays better, and larger pays better. And so you're only going to get those like higher APY percentages when you have a longer stake. That's really the only way to do it, or you just stake a huge amount. Either way, a huge amount provides more liquidity into the asset, which pumps the price up. And then if they stake it for a long period of time, and it's locked for that period of time, which also increases the price because people aren't selling. So just the game theory behind Hex it's masterful. It's genius level.
Yeah, it's funny that it started as Bitcoin Hex. I watched some of the early stuff, and it's like Bitcoin Hex, and it's something a lot more interesting than Bitcoin. As much as he wanted to bring over some Bitcoiners, I think he ended up just creating more enemies than he needed to. But at least there was a decent amount of Bitcoiners who took the option for the free hex, right? I imagine a lot of them dumped, and that's part of the reason why there's the 10,000. Well, they couldn't dump at that time though, could they? They had to hold for the 12 months, didn't they?
Yeah.
If they took the free Bitcoin. So what happened on that? The 12 months was around. At the same time, there was massive rewards for the unclaimed. So that sort of incentivized those people not to dump on that day, I'd imagine. So it was smart to be in when the unclaimed Bitcoin got distributed to Hex stakers. Is that that's kind of how it goes?
Yeah, that's right. But I mean, ultimately, the best strategy for anybody to get them to have Hex is just to buy it and hold it. And if you compare the charts to Bitcoin, for example, like actually, let me show you the charts right now. So there's different charts that I like to look at when I'm comparing, like when I'm just looking at Hex. Let me see here. Can you see my screen?
Yep.
Okay. So first one is this one. This is just Hex to USD. But the one I like to look at is I like to look at the market cap, and then I also like to look at Hex. Let me get rid of that. I like to look at Hex over Bitcoin, and then Hex over Ethereum. And this is Hex over Bitcoin. I mean, you could just see like this, just the price performance. This is the 2-day chart. Let me go to the 1-day chart. I mean, if you look at it and you measure from like this bottom wick to where it is now, I mean, it's done what is that? 25,000% gains against Bitcoin percent, more than that percentage wise. And then if you go to Ethereum, and if we, you can measure it from this wick over here, or you don't have to, but I don't like to measure from that wick because it's a wick. And then according to Ethereum, Hex over ETH, it's done like a 1,978x against Ethereum. So it's just like literally buying and holding this asset is literally the best thing you can do. And the reason why it's so powerful is because it incentivizes you to hold the asset for the long term. So, and you can earn rewards while you're holding it, and you're incentivized to hold it. You're not incentivized to have paper hands and sell it at a peak because it's locked up in a stake, unless you want to lose your, pay penalties. So it's like, it's beautiful because it incentivizes you to buy and hold. Buy and hold's the best strategy in crypto by far. I mean, all the people that got rich in Bitcoin were rich because they bought it when it first came out, or close to, or 2013, or maybe a little later. But that's like, ultimately that's the best strategy in crypto, is if you make gains in some of these lower cap altcoins, the strategy is to take profits into them, to some of the larger coins that you believe in, and hold them for the long term. And so if you're, but the beautiful thing about Hex is that you're literally getting paid to do that. It's just, the game theory behind it is just fantastic.
Yeah, I love that it's introducing, I love the whole scene of crypto, introducing economics to a new generation, even Elon's stuff with all the memes and Dogecoin and that. It makes people aware of what inflation is and what increasing supply, hard money. A lot of these things I had no idea about. I didn't learn about them at school. I had no idea what was going on with the money system.
They don't teach them.
Yeah.
Anywhere.
So even if you're not interested in Hex, it's valuable to understand it and to be able to have a conversation about it and understand why there are a bunch of people out there, some of whom are very smart and have backgrounds in finance, who are saying, yeah, this is what I'm doing. This is a good move. Like, being ignorant of why people are doing what they're doing has no advantage. Like, so I think the challenge of like understanding what is going on here, it is quite a steep learning curve. And then if you want to be able to use MetaMask, and like there's all these little barriers, just like, oh, I don't know if I want to learn another thing and a hardware wallet and all those things. But I think all those little challenges is part of the reason why people have been able to secure their economic futures, because they were able to go through those little barriers that other people stopped at, and went like, oh no, it's easy just to stay on the centralized exchange and just leave my tokens there, and those kinds of, it's easier. But then if your tokens happen to disappear because the centralized exchange gets hacked or collapses, then it would have been easier to do the hard thing of learning the hardware wallet, which is actually not that hard. Like, none of the stuff is that hard once you really start looking at it, right?
Yeah, and it's like, it's what they say in the Hex community. It's like, if it's not your keys, it's not your coins. Like, if you don't actually own the keys to your wallet, technically somebody could steal them from you. If it's a centralized exchange, you don't actually have control over your coins, your money, essentially. And that's really what the ethos of crypto is to take responsibility and to get rid of the middleman, and to sovereignty, right? Personal sovereignty. And that's why I like the Hex community, is because we're a bunch of free thinkers that come together, and we're in something that really is going to be Hex has already been the best performing asset in the history of crypto, and essentially in the history of the world. And to be in something that two more assets that have the same potential with a community like it is, it's just it's a quite liberating feeling.
I came across your work through the Snowball model that you put together for Hex staking. I think it would be a real shame to miss out. Hopefully we can do another one of these at some stage, but I'd love if you take us through the Snowball and what it kind of means to you in terms of this path to freedom and personal sovereignty.
Sure. So let me share my screen again. So the basic idea of a snowball is, first we've got to understand a few fundamentals of how Hex works. And let me where's my slide? So the first thing we need to understand before we understand what a snowball is we need to understand what a ladder is. And in Hex, like we've kind of been mentioning, you're incentivized to earn more Hex by staking your existing Hex for a given amount of time. And again, I always have to say this isn't financial advice. I'm just a guy who's connected some dots, essentially, is the way I stumbled across this. So a ladder, a staking ladder. So let's identify a stake first. A stake is when you lock up your Hex, your liquid Hex, for a certain amount of time, and you're essentially, in the Hex protocol, your word is your bond. So if you say you're going to lock up your Hex for 10 years, then the protocol expects you to keep your word. If you keep your word, then you will earn your interest, your yield, depending on how much you're staking. You purchase what's called T-shares. T-shares is just, it represents 1 trillion shares of the Hex protocol. But the T-share is what holds the value, and the T-share is what earns you more Hex. And so now that we know what a stake is, that's what a single individual stake is locking up your money for a period of time. A ladder is just a deposit of money broken up into several individual portions, which are then staked and minted at the end of your stake. When your stake matures after the given amount of time that you said you were going to stake it for, that's what a maturation date is, a matured stake. Then you can mint your rewards the same way a Bitcoin miner or an Ethereum miner will mint their rewards. And so when you mint those rewards through the Hex protocol, you could do that all the way up to 5,555 days. That's the maximum amount of time that you can stake your hex. So that's what a ladder is. And so to view that ladder, this is what it looks like on just a numeral chart, where time is on the x-axis and the return on investments on the y-axis. And so this is, as time goes on, you have several different stakes. Each one of these dots represents a single stake. So in essence, if you were to start the staking ladder process today on the Ethereum blockchain, you would essentially have a stake in this model. You'd be staking every single year. Okay, so you'd be doing a staking ladder every month, but each stake would be on a yearly basis. So if you had $100, if we go to let me go to this chart over here really fast. Let me do. Oh, that was it. So if you took $100 right now, if we take a calculator, and you divide $100 by the price of hex, the price of hex right now is 19 cents. So if we divide $100 by 19 cents, that gives us 526 hex. So not quite 555. In the example that I did in my video, it was 555 at the time, but just go with 555. Now, if we divide that 555, that's essentially what $100 in. That's what $100 is in hex, in liquid hex. So if we take that 555 hex, which is $100, we divide that by 15 stakes, because the idea is you want to have one stake per year. That gives us a total of 37 hex. So that's why I have this 37 here all the way down in this chart, because that represents one stake per year in this ladder. So the idea is that you're creating a new stake every single year that will mature every single year after the year of 2022. So in 2023, my first stake would mature, and I would have hex that was freed up that I can now choose to do whatever with. So that's what a ladder is just creating a 15 stakes on a yearly basis and having those stakes mature every single year. And the advantage to doing a ladder is it gives you the options to maneuver. So if there's ever a bull run or a bear run, it allows you to have hex come out every single year, and that gives you options as to what you can do with it. So, and that's a great strategy. This strategy works for a lot of people. There's a lot of hexicans who that's what they do, and that's it. They'll just have a big lump sum. They create one ladder, and that's it. And every single year they'll have money coming out essentially every year, and they can take profits on it, or compound it, or just take profits on it. So that's essentially what a staking ladder is. Do you have any questions on any of that so far?
I think it's good.
Okay.
I think I understand.
All right. So now what a snowball is, Albert Einstein said compound interest is the most powerful force in the universe. So the idea that I had, and a lot of hexicans have had this idea, and they've been discussed. I just want to make that clear. So I don't think that I'm like the founder of this idea, but I haven't seen anybody else show or share this idea on a bigger scale. And that's why I decided to make a video like this. So there's a few different ways that we can maximize or use this concept to our advantage. We can maximize this concept or do it on a more frequent basis. And so those options are staking longer, because if you stake longer, then you earn a higher return. If you stake larger, you also earn a higher return. If you stake more frequently, that also can give you more return, because you're doing this on a more frequent basis. It allows you to have more money moving, if that makes sense. And then the last way the last couple ways is to roll over your stake principal. So as soon as one of these stakes matures, let's say in 2023, you're now eligible to have that stake be unstaked. You can mint your rewards and collect on your interest. Well, now what you can do at that point, because you have freed up Hex, it's all liquid. Now you can roll that over into another stake. You can do another one of these ladders, but you can again roll over that principal and interest, and then any additional dry powder or any additional money that you have that you want to throw into it, you can add onto it at that point because you have money that's freed up. What you don't want to do is end a stake early, because like I mentioned before, if you end a stake early, then you're going to pay penalties to the other stakers in the pool who are keeping their word. So it's what's called the truth engine. If you do what you're going to say, you get rewarded. If you break your promise, you get penalized. That's the basic premise of it. So those are the ways that we can maximize the staking ladder process. And I call it vertical compounding and horizontal compounding. The verticality comes into effect because in a 15-year stake, you're going to earn because you're staking longer. And you're also earning because you're staking hopefully larger on a 15-year scale. But there's a downside to that, is like you got to wait 15 years for this stake to mature and you can take profits on it. So there's a risk to it because, you know, obviously your money is locked in something that you won't be able to have access to for 15 years. That's one of the main advantages of having a ladder to begin with, is that as 15 years goes on, you can take advantage of each year taking profits. And that's always a great strategy in crypto in general, is to just have a strategy to take profits, know when you're going to take profits going into it, and know what prices you want to buy going into it as well. That's one of the best strategies you can take, and then just dollar cost averaging. So I kind of took that concept of dollar cost averaging into something, and then planning my profit taking along the way. And it doesn't really matter what the price is at, because you're just assuming that the crypto space as a whole is going to go up over time. Does that make sense?
Yeah. The whole thing relies on that the hex coin has the similar or more value, right? Like that's, as we said before, like so far the biggest benefit is the fact that the hex coin has increased in value. So you could potentially have exponentially larger gains than what you're talking about here if hex growth continues. If for some reason hex coin was to collapse, then getting all these hex coins wouldn't be that valuable when you go to trade them for something else, right?
Yeah, and so that by having a process where you're constantly taking profits, because there is a risk. I mean, there is a chance. I mean, in my opinion, I don't think that it's a very likely chance, but in any speculative asset, there is a chance that asset goes to zero.
The fact that people have committed for 15 years means that they could unstake, but then they get penalized. So they're obviously planning on at least 7 years or longer. So there's very few cryptocurrencies where there's an expression of, I think I'm going to be interested in this 15 years from now. And if someone does have that kind of commitment to something, then the chances of them promoting it, telling their friends about it, like there's another level of interest that comes with having this staked, right? Like that strengthens the network effect, the social fabric that kind of props up the network.
Correct. Yeah. But at the same token, we will also want to cover ourselves if things go to shit, right? If let's, for whatever reason, if something happens and there's a rug pull, or if there's a big bubble in crypto that bursts, or whatever the case is, having these stakes along the way that allow you to take profits on them, it starts to counteract the risk of having these longer term stakes. And so let's say that halfway through, you've taken profits on halfway through your 15-year ladder. So by 2031, 2032, you've already taken profits on, I don't know, 7, 8, 9 years of stakes that have been matured. But you're also taking advantage of the fact that if things do go well, which we can make the assumption that they will go well, because crypto as a whole is a growing industry, and specifically with Hex and Pulse Chain and PulseX, they are in still very, very infant stages. So we're just hedging our long-term risk with the fact that we can take profits along the way and just being happy with the profits that we're making. And we're taking our principal, our money, and we're just spreading it across the table rather than just kind of making like a roulette, bet on like just a yes or a no, like a red or black, right? It's not an all or nothing play. Like if you were to take all your money and just 5 it, that can work for some people, but for people that don't want to expose themselves to as much risk, the ladder allows them to spread their risk across the table and consistently take profits. And so this is what it looks like if you set it up every single year for 15 years. So if you were to do a ladder every year, then again, that this is the idea, that this is a picture of what it would look like. You would have several of these ladders, and then each of these little dots is a single stake. So you have 15 ladders over the course of 15 years. But how can we maximize that even more? Because while that's good, our risk is now spread across the table. There's still some disadvantages to using this method. One of those main disadvantages is the fact that crypto is very cyclical. We kind of talked about this earlier, where there's boom and bust cycles. There's bear markets and there's bull markets. And in the bull markets they happen very, very quickly. They can happen within a matter of weeks. They can happen within a matter of days. And you can kind of slice and dice the market as it's going up. So you can take profits on a peak and then buy in on a dip, and then it'll go back up again and take profits again. So it allows you to take even more profits than before. So on a yearly basis is good in the sense that your risk is spread out, but you're still kind of limited, because if you're only doing it once a year, that means that every year, probably around the same day or same time that you staked the year before, you're kind of limited to only taking profits at that time of the year. And that could be good or bad depending on where the market is, right? If it's in a bear market, that's not very good, because you miss the time, you miss the opportunity to take advantage of the boom and bust cycle. Do you get where I'm going?
Yeah.
Okay. So the way to maximize that even more is to, I don't know if it's this slide. It's this one. So the way to maximize that even more, into the slideshow, is we stack more ladders in between each of these yearly ladders. We increase the frequency at which we're creating the ladders to begin with. So if you do it once a year, this is what it looks like. If you did it twice a year, so biannually, this is kind of what it would look like. Obviously, I mean, you would have more in between each one of these staking pillars. And then if you did it again 3 times a year, you would have even more, and again, so on and so forth. So the idea is that if we increase the frequency, then going back to this chart, the vertical compounding, if we're staking more frequently, that allows us to take advantage of the horizontal compounding, or the lateral building of your stakes. It's like building a foundation, right? It's like you build the foundation one brick at a time, and eventually you build a skyscraper that goes, very, very high. But building that foundation brick by brick, that takes time. So you have to let time go by for it to stack on top of each other, and eventually you'll have a big skyscraper. It's that same principle with the frequency. So a lot of people they confuse the vertical aspect. They think that they need to do it like larger, like I need to stake more because I'm staking, I'm getting a higher return because I'm staking more, a larger amount, which you can. And then the other misconception is staking long. So there's a lot of people in the Hex community, and there's debate on this. And I want to preface this comment by saying that every investor's profile is different. Everyone has different needs, and everyone has different risk levels. And depending on a person's age, like if somebody's like 70 years old and they don't think they're going to be around in 15 years, they may not want to stake for 5,555 days. Whatever the reason is, this strategy is kind of like a blanket strategy that every investor can tailor to their specific profile, if that makes sense.
Yeah.
So the advantage there is that now we're building laterally, because we've already covered the verticality part. We've already covered the long term. We've got 15-year stakes, so we're taking advantage of the longer pays better. And depending on how much you're staking with, you can also take advantage of larger pays better by just increasing the amount of money or hex that you're staking. So that's pretty self-explanatory. But the staking more frequently, meaning we're creating more ladders on a more frequent basis over time, now we can start building laterally, and that's where the real power of this strategy takes effect over the course of a decade or 2 decades. That's where you really start to see the compound effect take place. And again, we haven't seen this play out because Hex is so brand new. That's why the strategy is so powerful, is because it's got so much potential energy built up that over time it's just going to make massive waves. So this is just a list of the advantages. Go ahead. Do you have a question or anything?
So the change in the network is one of the key things there, right? Like the fact that the gas fees are not, if it's on Ethereum, you don't really want to be doing a lot of this stuff all the time because you get, basically taxed. You pay the fees to the miners every time you move. This is a much more viable strategy with the Pulse fees, right? Gas fees.
Yeah, so that's one thing that I will say is that, and there is argument, there is debate on this, going back and forth. Personally, I believe that waiting till Pulse Chain is the better play for this specific strategy. I do, however, suggest that if somebody hasn't staked already, if someone doesn't have at least a stake, then I think that this strategy is still a good strategy. I would just say at least get a stake in, and again, not financial advice, but the better strategy would be to get, generally speaking, is to get your stake in now, even if it's on the Ethereum chain, because you're going to get a copy of that on the Pulse chain when Pulse chain goes live. So you're essentially doubling the amount of coins that you have. You're doubling the amount of stakes you have just for having the stake on the Ethereum network. And then on top of that, you're taking advantage of the T-shares. The biggest pushback that I get on this strategy is the fact that people are saying that once the Pulse chain goes live, everybody's going to be doing stakes, which I agree with. And if that's the case, that means the T-share price is going to go up. And if the T-share price is going to go up, that means that your buying power, you don't have as much buying power. Meaning, if you spend $100 on Hex, now that's going to buy you more T-shares right here. This field here, you're going to buy, that buying power will purchase you more T-shares, which is really the token of value in the world of Hex. Owning T-shares is the value add of the Hex protocol. So the more T-shares you can own, the higher returns you're going to get. And so by locking in the T-share rate now versus waiting till Pulse chain, you're essentially saying, I'm going to go ahead and lock this rate in now and do for example, a 555 stake and get a better rate, a better T-share rate to earn a higher interest yield than waiting till the Pulse chain. That's the main pushback argument that I get.
So you're getting the T-shares for the whole 5, like the whole duration. You're going to get them at a higher rate if you make the commitment before there's a lot of other people who've made the same commitment. That's Correct. What you're saying, like.
Yes. Yeah. Because the more people start staking, that means there's more demand for the T-shares, and the higher the demand is for the T-shares, that means the price is going to increase.
What can you actually do with T-shares though? Like that T-share is not tradable like Hex token, is it? Or how does it work?
No, the T-share is just.
Is it a multiplier or?
It's just it's a T-share is a trillion shares. That's literally what it is. It's a trillion shares of the Hex protocol.
That's confusing. Like, I think it's a trillion shares of the Hex protocol. It's not trillion Hex tokens. Like, what does the trillion shares of the Hex protocol mean?
So let's do this. This might, okay. So this is the staker app. So this is where you would go to actually stake your Hex. And all you do is you connect your MetaMask wallet, you'd have your Hex in the wallet, and then you'd come here, you'd put the stake length, the amount of Hex you'd want to stake, and then the staked length in days. Yep. And then from here, it'll generate everything for you. So the share price and the T share price, these are the metrics that you use to calculate like what percentages you're going to get. So for example, if we go back to this chart, if you just input all the numbers here, right? This chart's great because it literally does all of this for you. So with the share rate, the payout per T share rate is here. This price right here will go up over time. And the higher this price goes up, that means the less percentages it's going to yield you. That means, and it depends on the time that you're doing it. So essentially what you're doing is locking in that rate at an earlier stage. And the T-share rate is like, how do you explain? It's a little difficult to understand, but the T-share rate right now is like $4,000 or $5,000 per T-share. There's also B shares, a billion shares per Hex. And in fact, I think it might even calculate it by Harts. I can't remember. But essentially, all you need to know is that the T-share price is what matters in regards to the Hex protocol. And so if you take whatever price or whatever amount of Hex that you want to stake, and you enter it into this chart here, these ladders, it'll calculate everything for you. And so that's, I guess the main pushback to, like I said earlier, to my argument to the snowball strategy is the fact that by locking in the T-share rate now, you're essentially guaranteeing that you're going to get a better rate now than you will in the future. You follow?
Yeah. So like a better interest rate. Because the interest rate will come down if there's, is that kind of how it works with the T-shares? That's the effectively like is that impacting the APY there?
Mm-hmm. Yeah, the T-share is what affects the APY.
Yeah. That makes
sense.
So
by getting a lower T-share price now, it'll essentially increase the APY that you're going to be earning.
Yep.
So that's the main pushback to waiting for a pulse chain is that I've been getting is like, well, no, this makes sense more to me, more so if you don't have a stake already, or if you don't have some stakes. In my opinion, I think it's best to at least get one stake going for you if you want to like a 10-year or 5-5-5-5 before the pulse chain goes live, because then that way you're locking in at least one stake with a good T-share price before the fork happens. You're also going to get a copy of it on the pulse chain. And then once the pulse chain comes out, now you can start doing these snowballs, these bigger ladders. And it's just a bit more beneficial. You're going to save yourself time. You're going to save yourself gas fees on the pulse chain, because each time you do one of these stakes right here in this ladder, each one of those is going to cost you gas. Make sense?
Yeah. That's one of the key things of the snowball strategy, right? Like that, if you're only investing small amounts of money, then the gas would be prohibitive on ETH, but moving to Pulse, you can get your stakes in on a regular basis. One of the things that's most interesting to me with what you've spoken about, apart from like making the money, is the habit of putting money into something that you think is going to go up in value. Like if more people had that habit, like the habit of some of what I work so hard for in my job is going to stay with me. And this is the plan for some of it. This is the plan for the other part. Everybody has to make their own decisions, and it's effectively their bets. Like life is a series of bets. Maybe it's the wrong word because it's not necessarily gambling, but you have to, even keeping your money in the bank, you're betting on the bank. Like you're saying, well, I think this bank's going to continue to exist. I think the US dollar or wherever you live is going to retain value. If you live in Argentina or Venezuela, then you have the experience of that not being amazing. What I love is that you've really mapped out a coherent strategy that shows compounding interest, the power of compounding interest, the power of delayed gratification. It's encouraging people to consider options other than trading and trying to turn $100 into $1,000 in a few months by chopping and changing things where you might end up with nothing or next to nothing, versus this concept, I think, is a very, very powerful one. People can debate about whether they should do it here or not, but you can't debate the mathematics of compounding, right?
Yep.
So that's probably the thing that I would love for people to take home. And yeah, I guess if people want to look into Hex, then your channel, Crypto Fitness, and there's plenty of places out there that you can look to find out more. But yeah, that concept is super, super powerful.
Yeah, no, definitely. It's really an eye opener once you can not only visualize it, but if you can, so, I mean, I'll link, I don't know, maybe I'll send you the link, but you can visit my channel
People can,
in the snowball video, there's the link to the chart itself that you were just looking at. Anybody can just go download that chart and just type in the numbers for themselves with however much money they want to play with, whether it's $100, $1,000, $5,000, $50, whatever. The great thing about the Pulse chain is that when it goes live, you could utilize a strategy with a couple dollars per ladder. If somebody really was struggling out there, they could literally do this strategy with $10 per ladder or something like that, because the gas fees would be minimal. I mean, they're going to be probably less than pennies, especially at the beginning.
Yeah. So there's a chance that if the gas fees are higher, then that means that everybody won more than likely, because that means there's going to be tons of traffic on the network. And the only way there's going to be a lot of traffic on the network is if the prices are all looking good, right? So there is a chance that eventually the fees will be prohibitive for the snowball, but by that time, the gas would be less significant, more than likely, depending on how much you were snowballing. And the only way the gas gets high on Pulse is, if there's a lot of traffic and a lot of value there.
And I mean, I make the argument that I don't think the Pulse chain will ever be that packed, like that congested, unless like a massive amount of the population of the world are on the Pulse chain specifically. Because if you were just do this quick thought experiment, if you were to just get rid of Ethereum, like if you took all the liquidity from Ethereum, the developers, the assets, the users, literally if you took all of the network effect of Ethereum and you went and put it on the Pulse chain, just dropped it right on it, the Pulse chain, the fees wouldn't be the same. It wouldn't be the same, even though Ethereum is congested right now with the amount of liquidity and users and developers that are on it now. It's not going to be as congested if you were to just take all those users and put it on the Pulse chain, because the Pulse chain has been designed from the get-go for higher throughput, for faster transaction speeds, for high volume, for high liquidity, for lots of users. It's literally built that way from the very beginning, before it even comes to market. So the fees would be a lot higher than a couple pennies probably, but it's not going to be anywhere near what the Ethereum is right now, because it's more efficient.
Yeah, okay. I haven't heard about the maths of that, of the scale. That's cool to hear as well. ETH is so, it's not just that it's expensive, like that being annoying. It's a barrier to progress. Like it's a barrier to development, because you can't do micropayments. It excludes a lot of like small fish, as you say, and guys who don't have a ton of money, like Ethereum. A lot of the stuff that you might want to do, it's just like, well, I got to spend as much as I wanted to invest in fees. Like you lose so much of your investment with that. So that's what's really exciting to see, what's going to happen with that. I hope that if there is an Ethereum 2 and this problem gets solved on Ethereum, it's definitely going to be solved on other chains. And it's cool to see, like the biggest attempt at solving that is probably the Pulse, from what I can see in PulseX, like in the way that it's forking all the coins. And we won't go into that because it's another mind bender to understand what it means by forking coins and
another
getting
conversation for another day.
Second chain and that sort of thing. But I really, really appreciate your time today. It's been a great conversation, and I enjoy the connection to other guys who love fitness, and they also exploring the world of crypto. So you taught me a bunch of stuff today, and I really appreciate you taking out some time for me.
Pleasure.
Champion. So I should say I didn't end it. Where can people find out more? Just to be clear, are you using, what's the best channels? Obviously, you got your YouTube, and I'll link that one. But
yep. Yeah, I got my YouTube channel. It's Crypto Fitness on YouTube. Just type in the search bar Crypto Fitness. Should be the first one there. You can find me at let's see, Crypto Fitness. You can find me at A Pure Escobar on Twitter and Instagram, and then I have a website as well, escobarj.com. You can visit that, or if you want to visit my NFT project, it's escobarj.com/beast-bros-NFT.
Awesome. And I'll put all those links in the comments as well. So thanks so much today. And looking forward to continuing to learn.
All right, brother. Take care.
See ya.